Hey guys, it's a market update. Some important data about inflation came out today. We're going to look at that and how that affects the price of Bitcoin and potentially central banks in the future starting to ease policy, not make it tighter. We're still in the tightening phase, so I'm bearish. I think you just have to have a bearish mindset if you're trading here. This was a potential trade setup that I was looking at, which is a bearish flag, which is the ascending wedge, especially in a bear market. A couple of profit targets here that both got hit. So that would have been a good trade on that one. We saw Bitcoin come off a little bit today on news that 3AC have basically been gone into official receivership and liquidation. Also, the Grayscale Bitcoin ETF was rejected again. They have now gone into an official lawsuit against the SEC to basically put the Bitcoin ETF on. That may take 12 to 18 months before that is they get some clarity on that. So don't think that's going to affect the price of Bitcoin too much anyway. But in any case, any news during a bear market is basically an opportunity for people to sell off. But this would have been a good short trade right here. But what we can see, potentially support levels around the 17,500 level, really could easily test that again, especially with the stock market, which is just falling off a cliff every single day. But yeah, right now, the data is suggesting you just have to remain bearish bias if you're trading. But obviously, looking out 6 months in the future, things are going to look very, very different. And we're seeing some bond guys and some macro guys thinking that interest rates may have peaked, and they're actually starting to come off now. So I'll look at that data in a second. Firstly, though, this data came out today. The main thing is to highlight right here that spending, US consumer spending, was up year on year, but way less than expected. And this feeds through to some other data that tells us that potentially the inflation story is going to start turning into a recession story. Also, something they're looking at, which is coming out tomorrow on Friday, is PMI figures, Purchasing Managers Index. Now, if this is in the low 50s ever in history, it has predicted a recession every single time. And so that's what people are looking at. Now, this is coming out tomorrow. So important figure to watch for. If it's in the low 50s and it hangs around there, that is a recession essentially. And that is why bond guys are saying they think that rates are going to be coming down in the second half. Rates being lower is generally good for equities, but not during a recession because business incomes fall, price to earnings fall. And so that could continue to be a weight on the Bitcoin price. Bitcoin miners are also capitulating now. The profits that they're making from mining Bitcoin have evaporated, and so they're actually selling their mining rigs. Mining rigs are like way cheaper than before, and they're just selling Bitcoin to fund the loans that they took out to buy the rigs. So I just see continued weight on the price of Bitcoin and therefore crypto. But this is rates. These are interest rates. You see, they peaked up here at 3.5. Today on the PCE and the other figures, you can see they're coming down. So they're actually testing support. This is really important. If rates continue to fall, throughout the kind of second half, what the bond market is telling you is that they think the Fed will not be able to raise rates anymore. The recession is going to be here, and they're going to have to actually start at least pausing the rise in rates or potentially cutting them as well. So the bond market is going to test the Fed to see how forthright they are in actually raising rates. But what we're looking at is the recession data coming through, and so that could be pretty painful over the next few months. Just have to remain bearish at this point because there's still a lot of recessionary figures that have to come out, including jobs losses and lower earnings and everything like that. So, I don't think we've seen the bottom yet. We're going to be testing lows. It's really the only outcome that I can see right here. But moving into next year, the market is thinking that cuts are going to be coming, rate cuts, because the recession has happened, inflation has come down, and then they'll start easing again. So depends who you are as a trader. Short term, for sure, bearish. Long term, I'm super bullish on Bitcoin. If you do want to trade either, long or short on Bitcoin, you can use Bybit. They'll give you a $4,000 deposit if you deposit some crypto on there or fiat. So I'll leave that link in the description. I do want to leave you with one bit of good news though, which is potentially the Bank of International Settlements saying that banks should actually hold some Bitcoin. I think this is absolutely massive news. The type of news that gets lost in a bear market. Just in, Bank of International Settlements literally proposes themselves letting banks hold 1% of their reserves in Bitcoin. Now you can see Bitcoin Magazine here says 1% of reserves is 1.8 trillion. So potentially, over almost $2 trillion of inflows into Bitcoin as a reserve currency. So you can see these things. If you are a long-term investor, you can see the general trade But during a bear market, things like this get lost. But I think it's important to see these long-term drivers for growth as well, because during a bear market, it's often, you often forget about these, but this is a long-term driver. And if banks, we're seeing central banks of small countries do this. If larger countries do it as well, I think it's big news. Check the Bybit link in the description if you want to get that deposit bonus. It's a tough market out there though, for sure. I'm James with MoneyCG. Cheers for watching, and I'll see you in the next one.